gold and silver belong on the same level now. And both, I think, my feeling on this is we've been halfway through this move. There's another half to go. It's probably not as straight up, but the next big push is going to come when that news breaks and people realize what the BRICS are doing with gold. And that's going to be where we get that clear break well above 2,500 on its way to 3,000, and silver, $35, $40 heading towards 50. Getting past the next few days or a few weeks until we have this fall meeting, yeah, we could flounder either side of a couple of dollars on silver and $100 or so on gold, but they still have substantial upside potential.
According to precious metal strategists at MKS PAMP, based on historical trends and regular seasonal performance, precious metals may be significantly underpriced in the second half of the year. In their Precious Metals Seasonal Report, released on July 3rd, the company's strategists emphasized the importance of a nuanced understanding of seasonal trends for metals investors. They noted that, on average, the second-half performances of gold, silver, platinum, palladium, and copper tend to be more bullish than those in the first half of the year. PeterGrandich, the former head of investment strategy for a leading New York stock exchange, predicts that BRICS actions will drive gold and silver with a strong long-term outlook. Based on his analysis, Grandich states the fundamental argument for silver has dramatically improved due to increased industrial usage and a bullish supply and demand scenario. He expresses that silver should be considered equally alongside gold. Industrial demand for silver set a record of 654.4 million ounces in 2023, and it is expected to hit new highs this year. According to the Silver Institute, ongoing structural gains from green economy applications underpinned this surge in silver demand. Despite the current market scenario, Grandich is surprised that many people are unaware that gold has outperformed stocks since the start of the new millennium. Regarding the current state of mining shares, Grandich mentions that the idea that owning mining shares is like owning gold is no longer true. He predicts that mining companies will face increased challenges in reaching investors and operating in various regions, making it harder to achieve significant gains. Since 1968, the historical trend shows that gold mining stocks have continuously declined relative to gold bullion, marking a persistent downward trend spanning 55 years and counting. Now we present the clips of PeterGrandich's insights from his recent interview with Kinesis Money. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
When I last spoke at shows, I used to get the irk of silver investors because I'd always say silver was the kissing cousin to gold and that I would always own more gold than I would own silver. But what I've said of late to people is the fundamental argument for silver has changed dramatically for the better. There is so much more industrial usage for it, and the known supply and demand scenario has turned extremely bullish for it. So I believe you should be equal weight in it. But let me also point this to you. If you went out and polled 100 American financial advisors now in any part of our country and said, since the new millennium started, what has performed better? Stocks, bonds, and gold. They'd all say stocks. They'll say bonds second and then gold. And then when you show them that gold has outperformed even the stock market for almost 25 years, they scratch their head and go, I didn't know that. And yet so few people have that exposure to it. So I think an equal breakdown in it is worthy of it. I do think that there tends to be a tendency among individual investors to take quantity over so-called quality, in a sense that they like to have 10,000 shares of a dollar stock versus 1,000 shares of a $10 stock, even though it's the same amount of money. But I really believe gold and silver belong on the same level now. And both, I think, my feeling on this is we've been halfway through this move. There's another half to go. It's probably not as straight up, but the next big push is going to come when that news breaks and people realize what the BRICS are doing with gold. And that's going to be where we get that clear break well above 2,500 on its way to 3,000, and silver, $35, $40 heading towards 50. Getting past the next few days or a few weeks until we have this fall meeting, yeah, we could flounder either side of a couple of dollars on silver and $100 or so on gold, but they still have substantial upside potential. And again, the worst case scenario is to buy it and hope it doesn't go up, because most people steal assets are based in financial assets, not hard assets. One of the sayings a lot of us that were involved with shares 10, 20, 30 years ago used to say can no longer be said at a gold show. We used to say owning mining shares is just like owning gold. That statement is no longer true because nothing has been further from the truth the last couple of years. While gold rose steadily from 12, 1300 to 1600 to 2000, all the way most recently to the highs, mining shares on average went substantially the other way. And the lower you went in the food chain down to the more riskier exploration, the bigger the losses were. It's still unfathomable for me, somebody that's been doing this for 40 plus years, to somebody who would have said to me, if you would have said to me back at the 2011 London, hey, Pete, I was in the future. 2024, gold's 24.50, silver's around 30, copper's above $4. I would say, man, my mining shares, I must have made a killing. Well, the only person that's been killed so far is my portfolio. It's just, it is explainable, but it's still unbelievable. And let me go quickly through. The first biggest change is the type of people who used to buy those type of stocks has dissipated or disappeared. For instance, all around the world, didn't matter whether it was in Europe, Asia, North America, there were brokers, we were called brokers then we became financial advisors, who built books of businesses of buying and selling these type of companies. And we would have dozens of clients, if not hundreds of clients. So if a mining company or a junior resource company got PeterGrandich interested, they got my book of business. Well, those people are gone. Almost no one does business anymore on pure commission-based business. You can buy stocks for nothing. Why pay somebody a couple $100s for something you can get for nothing? So that end user, who I'll argue there's not as many people today buying those type of stocks as there were 10 years ago, because one thing crypto has done, it stole the junior resource market's lunch in terms of potential investors. Now that mining company or junior, he has to try to reach those end users almost on a case-by-case basis. So it's far more difficult from a marketing standpoint. The second problem is it's not easy to go anywhere in the world anymore, Andy, and simply go like this to a country on a globe and go, yeah, we can go there. That's changed dramatically for mining companies. There's very few places, most will tell you private at least, that they feel comfortable to sink a couple $1 billion.
During the interview, PeterGrandich highlighted the pressing issue of mounting debt and deficits, which pose a looming threat to the U.S.'s ability to sustain its financial responsibilities soon. Debt burdens have grown so large, in part because of the cost of the pandemic, that they now pose a growing threat to living standards even in rich economies, including the United States. According to a recent report released by the U.S. Congressional Budget Office, CBO, the U.S. publicly held debt to GDP ratio is projected to surge from 97% in 2023 to 107% by the end of 2029, exceeding the historical peak just after World War II. Highlighting the BRICS nations' influence, Grandich underscores their collective economic actions as pivotal in reshaping global financial dynamics. He cautions that neglecting issues like mounting debt, retirement crises, and governmental policies could lead to substantial economic misunderstandings, particularly regarding the escalating influence of the BRICS countries on international trade and finance. Let's get back to the interview.
I read recently when you wrote about that, and that was so intriguing because I'm a big believer in the BRICS. I believe, in fact, let me take a step back and so I believe there's 5 key factors for Americans. As Americans, I can't speak for Europeans, but as Americans, they should build what I call a financial arc. That's what I started stating in March. One we all know about, we can talk about to the cows come home, the debt and deficits. We're going to get to a point soon where we're going to have a problem paying just the interest. Second, in America, we have a huge retirement and aging crisis. Third, and it's around the world, you got it too, we have an immigration invasion. And there are economic consequences that people don't understand. I'm going to skip to the 5th one. We also have here in America political paralysis. We have 2 parties that can no longer work together, be in the same room, and each has a splintering within their group, moving in the opposite direction of the main middle ground. But the 4th reason I've told people, and I've said it's the most overlooked economic decision that Wall Street has messed up on, probably in modern times, will be the misunderstanding and not appreciating what is happening with the BRIC nations. You and I exchange that stuff, so we know each of us have been speaking about that. It is unbelievable I gave a talk recently to some young advisors, and I said to them, let me ask you something. Even if it only ends up 20 or 30 countries, that's 20 and 30 countries that used to deal with the United States in a big way and now won't be. How's that beneficial to the United States? How does the BRICS benefit the United States? It doesn't. It's so negative. Again, you being ahead of the time like you were about the manipulation. I absolutely agree with you. I don't have the contacts you have, but it's important when people like you talk about it because I know you do. There's no question that this big movement in gold that occurred in my mind, Andy, and I know I'm singing to the choir, but even if I was being on national TV, I'd say the same thing right now, happened not for a trade, not for speculation, but because people believe an alternative is going to be necessary, even on just on a regional basis to start, and eventually, because people are just going to see that trusting paper is a lost cause when everything goes to hell in a handbasket in the United States. And where's it going to be used? It's going to be used by the groups in the BRICS. Now, how they exactly use it, that's your area of expertise. And I always bow to people that I know that are smarter than me, and you are. But I'll just tell you this, you're absolutely right. And I think it's going to be a shock to people. And most people on Wall Street can barely spell BRICS. They have no concept of what has been transpiring, how they've already been, like you said, testing trading, forming associations. Look, again, here in our media, no one made anything about how the Saudis has just said, you know what? I think we're basically done just with dollars. I think we're willing to sell to whoever we want. And by the way, we're also interested in joining the BRICS as well. It's a phenomena that doesn't shock me because I'll say this, Andy, and then I'll shut up. You can toss most financial advisors off the top of the Empire State Building and all the way down, they'll all say the same thing. Hey, so far, so good. Wall Street has this horrific habit of always seeing the cup half full. It doesn't pay to see it half empty.
The World Bank's forecast for precious metals prices in 2025 suggests they will stay high. But despite recent declines, Wall Street pros remain focused on the long-term story in commodities, telling Yahoo Finance that the fundamentals are still strong and they're confident the record-setting rally will resume. How do you see the evolving geopolitical and economic landscape influencing the future prices of gold and silver? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.